And just to introduce the speaker, I would like to welcome Ms. Disha Bhandari. She is she's an associate partner. She's an associate partner practicing service tax and GST in the Jaipur office of Lakshmi Kumaran and Sridharan. So a very good firm and a very good speaker we have today to discuss all the provisions. And just to tell her background, that she has an in-depth knowledge of the tariff classifications, and she has represented multiple companies with respect to customs classification. So I'm sure that she is an expert in the classification field, and she continues to advise and represent leading corporate houses. And apart from this, she is an alumnus of Symbiosis Law School, Pune, and she's also a qualified company secretary, plus an advocate on record in Supreme Court of India since last 4 years. So, and she's also a prolific speaker. I've heard her earlier also. So I'm sure we'll all be getting a good, kind of knowledge with her, knowledge discussion and whatever we have. And it's a very limited group, I'm sure. So all the members of the group will surely be benefited out of your deliberation, Ms. Disha. So over to Karthik now, and for the next discussions.
Good morning, everyone. As we all know, today's topic is interplay between indirect taxes and transfer pricing. So transfer pricing, as per our common understanding, is when one entity is doing any transaction with its related party, the transaction has to be at the arm's length price as per income tax. Now we want to understand that what are the aspects in this transfer pricing scenario of the IGST and other taxes as well. So we welcome Advocate Disha Bhandari ji. So we can discuss all these matters, and the questions will be taken as per the discussion of the speaker or at the end as per the situation. So please, and any other thing you want to ask, then you can write in the chat box also. We can discuss the thing at the end. Okay, so we can start the meeting. I think it's time. We can just let me admit all the other participants. Yes. So I hand over to Ms. Advocate Disha Bhandari ji. Please start the meeting and guide us on this topic. Thank you.
Are you able to hear me?
Yes,
good morning, everyone. Before I start the discussion, I wanted to thank the association, especially the Jaipur chapter, for giving me the opportunity to express my thoughts on this interesting topic on this platform. I also wanted to thank everyone who have taken time out from their weekend, Saturday being a weekend, to listen to my thoughts on this topic. So without further delay, I'll start with the discussion on this topic today. Like already said, the topic is interplay of GST, customs, and income tax. See, as we all know, the domain area of the GST, the customs and income tax is very separate. GST, or customs, you impose customs when you're importing certain goods. GST to a certain extent is for inter and intrastate transactions, which is happening in India. Of course, it has some element in customs also, and that's why the interplay. And lastly, the income tax, which is completely a different thing, because GST and customs are indirect tax and income tax is in direct tax. However, though the three seems to be slightly different, there is an interplay between them. And this interplay is in basically two respects, the two respects of classification and valuation. Now, a lot of times it happens that because of this interplay, there would be a lot of conflicts also. So how do we redress that conflict is going to be the third point on my agenda. So we will start with the interplay in classification of customs and GST. Then we'll move to interplay in valuation with respect to valuation in customs, GST, and income tax. And if at all there is in conflict or what, maybe we'll discuss about the different kind of approaches which are being taken by the income tax authorities and by the, say, DRI and DGJI in GST and customs. So we'll start first with the classification. Whenever any goods are, supplied, say if the supply is happening in Rajasthan, so the recipient is also in Rajasthan and the supplier is also in Rajasthan, then that is called to be an intrastate supply on which CGST and SGST is charged. Now, in a situation where, say, the goods are being supplied from Delhi to Rajasthan or the other way around, then it's because there are two states which are involved. It's called as an interstate supplies. Now, I'll hold it here and then I'll directly come to the customs point. Whenever certain goods are imported, say from USA, these goods are coming to India. Then what is levied? The first part is customs duty. So therefore, that's taken care by the Customs Act. But it doesn't stop there. Apart from customs duty, there is another duty which is imposed when you are importing certain goods in India. And that is IGST. And this is the linking point. Section 5 of the IGST Act is the linking point of customs and GST. Because when you are importing certain goods into India, apart from basic customs duty, you will also have to pay IGST. Now, having said that we have to pay IGST, what is the rate of IGST? How it is going to be paid? There is a specific notification, which is notification 1 of 2017, which gives you the rate of IGST, which you will have to pay at the time you import the goods. And there are a lot of schedules. So unlike in customs tariff, you just have one customs tariff and there are various chapters, there are various sections, etc. But it's just one document. Now, as against that, in the in notification 1 of 2017, so it's also definitely one document, but there are various schedules. So say if what you're importing is falling under schedule 2, you will have to pay 12%. Let's take an example of, say, spectacles, corrective spectacles. When you're importing them, it's come under schedule 2, you'll have to pay 12%. As against that, if you are, say, importing sunglasses, then you'll come in schedule 3 and you'll have to pay 18%. So that's how the schedule works. In case if you are, say, importing these non-alcoholic carbonated beverages, then you'll come in schedule 4, 28%. So that's how the schedule and the rate works. Now, one important point which I would like to mention here, that I said that when I was giving the example that if you are, a corrective spectacle, then you'll come under 12%. But how do I know that a corrective spectacle will come under 12% or a non-alcoholic carbonated beverage is going to come under 28%? And where is the interplay? Because the topic today is customs and GST linkage. So here what I am saying is just talking about the GST notification. Why is there an interplay? Why am I talking about customs? How it is important? And if at all, firstly, is it important? And second, why is it important? And when it's going to be made applicable? The answer to all these questions are in the notification itself. So there are two main explanations which are given in the. Are you able to see the screen? I'm so sorry, it just stopped somehow. Are you able to see it now?
Yes, we are able to see it now.
Sorry. So the answer to these questions are in the explanation itself or in the notification itself. One point I would want to say that in the notification as well in the customs tariff, you'll find the description as tariff heading, subheading, heading, chapter. What are these? I'm going to come and explain it to you in some time. But one of the explanation in the notification, it says that the tariff item, subheading, heading, chapter, etc. What have been used in the notification will have the same meaning as has been given in the Customs Tariff Act. So therefore, the first point of linkage is the meaning of the terms tariff item, subheading, heading, chapter, etc. is going to be the same. So when you say tariff item or when you say chapter 22 of customs tariff and chapter 22 of under the notification are going to be the same. This is the first point of linkage. Now the second point of linkage and which somehow seems to be applied automatically without putting some thought to it is the second one. The second one says that the rules for the interpretation of the first schedule to the customs tariff, including the section and the chapter note and the general explanatory notes of the first schedule, shall, and now I'm going to lay my emphasis on, so far as may be, apply to the interpretation of notification. These 5 words, so far as may be, are very crucial. It's not that whenever you are interpreting any entry in the notification 1 of 2017, you just look at the description, you look at the entry, and you directly go to the customs to understand the meaning of it. That is completely wrong. Why? Or, the legislature has very specifically put these words, so far as may be. And why they have done this is that when the entry which is given under the notification is identical, and again, it's identical to what has been given in the customs tariff, only then these other interplay, or you can rely to the general rules of interpretation. So therefore, what has to be kept in mind when you are interpreting any entry in the notification, please do stop, have a look at the entry in the notification, compare it with the entry in the customs tariff. If these are same, then you move ahead and apply general rules of interpretation. Otherwise, you cannot do that. And lastly, now when I say general rules of interpretation, then automatically the next thing comes that, okay, now since it's aligned, let's see the harmonized system of nomenclature. So why do we do that? It's because of the fact that we are a member country of WCO, and our tariff is at 6-digit level aligned with the harmonized system of nomenclature. So therefore, whatever explanation has been given under HSN to know as to where your product is going to be or what all things are covered in a particular heading, for that you can place reliance on the harmonized system of nomenclature. So those 3 parameters are very important. Now, like in this explanation, I mentioned tariff item, subheading, heading, chapter. What are these? You know what? So to that illustrate, I've taken an example of say nomenclature 22029920. These under the customs tariff is fruit juice based drinks. Now the first 2 digits, which is 22, this is called a chapter. So fruit juice based drinks fall under chapter 22. Then come the next 2 digits, which is 2202. This is called a heading. So now my product falls under the heading 2202. Then I go further and I say 220299. This is the subheading. Now the HSN is aligned only up to the 6 digits. The next 8 digits that are in India. So 22029920 is 8 digit, which is in India, and it's called as tariff item. There's a possibility, or there are other countries, like USA, where you have 10 digits. So there's going to be a possibility, and it's very likely that there might not be alignment at say 8 digit or 10 digits of the tariff of the of WCO members, but the alignment up to 6 digits is going to be there. Now, when I say that you have to now let's come to this conclusion that our entry in the notification is aligned with the entry which is given under the customs tariff, and accordingly we can rely on the general rules of interpretation. So there are 6 general rules of interpretation which are there in the HSN also. Now rule 1 that says or these are, when I say general rules of interpretation, what are these? These are basically the principles you will have to apply when you are classifying certain item, be it import or be it for domestic transactions also. Now, let's look at rule 1. Rule 1 says that you have to classify an item on the basis of their heading or the relative section and chapter notes. So if by specifically say your corrective spectacle, like the example I gave, that's coming under in the heading. So then on the basis of that heading, you're going to classify that item. This is a very simple one. And this is the most important one, because if by virtue of the heading itself, your item can be classified, then you need not go to rule 2A, 2B, 3A, 3B, 3C, etc. Rule 1 is of paramount importance. Then come rule 2A, or then comes rule 2, which says how you're going to classify, say, incomplete goods and unassembled goods. Let's take an example where you have imported a car without a seat. Now, of course, as can be, it's an incomplete item. But how are you going to classify it? Will it be classified as a car or it will not be classified as a car? Then let's look at the example. Let's then look at the second case, unassembled goods. Say someone has, bought a bicycle from the shop. Now, when you go to a shop, the shopkeeper would also, assemble the bicycle. And now it's a fully functional bicycle. As against that, today's youth, like me, who would love to order from Amazon. I ordered a bicycle from Amazon, but Amazon is not going to install it for me because, of course, it's for transportation. It's not possible to send a cycle. As against that, they've given me an unassembled bicycle. Now I need to assemble it at my home. All the tools, etc., are given along with the bicycle. Now, what is going to be the classification? Will the classification of the bicycle, which is purchased from the shop, as against the bicycle which is purchased from Amazon, is that going to be differ because it's assembled and unassembled goods? So the answer or the principle to this lies in rule 2, which says that in case if there is an incomplete article or an unassembled goods which has attained the essential character of a complete or an assembled goods, then it is going to be classified as a complete good or an assembled goods. So in our case, an aeroplane without a seat will still be qualified as an aeroplane if it has attained the essential character. An unassembled bicycle is also going to be classified as a bicycle, provided it has attained the essential character or the nature of the finished goods. Moving further, then we have the three most debated rules: rule 3A, 3B, and 3C. Now, 3A talks about the first. Rule 3A talks about the principle of how are you going to classify where a specific entry is there and when there is a general entry. Now, let's take the example of what we just did. Say there are two entries and I know that the seats are going to be imported for my car. Now, there are two entries. First is seat. The second entry is parts of motor car. Where are you going to classify those seats at the time of import? Are these going to be classified as seats or they're going to be imported parts of motor vehicle? The principle again has been given in rule 3A, which says a specific entry is going to prevail over the general entry. Now, this is the rule 3A. Let's go to rule 3B, which talks about composite goods or sets which are put up in retail sale. For that, I would like to take the example of, say, your lifelines. I'm not talking about your spouses and family. I'm talking about the other important lifeline, which is the mobile phone. Now, these days, you carry your mobile phone. Now, let's see what all functions you perform with your mobile phone. You, of course, use it for the traditional function, which is calling, maybe receiving messages or WhatsApp. But you also use it as a calculator. You also use it as a clock. When you're looking, when you want to put an alarm, you a lot of times use it as a television also, because you have apps like Netflix, Amazon Prime, all installed on it. I have hardly seen people using television. Nowadays, movies are seen on the mobile itself. Then, say when you are going for a jog, then you use your mobile phone for dual purpose. You'll use it to listen to audio, music also, and you'll also use it as a pedometer to know how many steps have you taken. So there are so many functions which are performed by one product, which is mobile phone. So it's a composite good, it's a multifunctional device. How are you going to classify it? Oh, I forgot the camera portion. Cameras. These days, mobile phones, as a matter of fact, has done away with cameras. People don't carry those big DSLRs. No, they would rather take their phones for capturing the photographs. So what is it? Is it a camera? Is it an audio player? Is it an alarm clock? Is it a television? There are so many functions which are performed by one single mobile phone. How are you going to classify it? The answer again has been given in rule 3b, and it says that you have to look at the essential character, the basic purpose with which it is purchased. That is the underlying principle under rule 3b. Then last is rule 3c, which basically talks about latter the better. Now, if I'm not able to classify my item on the basis of rule 3a or on 3b, I will have to look at the last entry. So say if my item is coming under serial number 1, and when I'm talking about the customs tariff here, say at X entry and Y entry is of course coming after X entry, I will have to classify my item under the Y entry. This is the principle of rule 3c. Whether 3c is going to be applicable in GST, while in IGST, that's a different question altogether. We'll come to that also. Then there are some other rules like the most akin heading, wherever if you're not able to classify the items under on the basis of the previous rules, then you'll have to look at the heading which is most akin to your item. Then rule 5, how are you going to classify the packaging items like camera case, mobile case, etc. that there. And rule 6, which as a matter of fact, ideally should not be the thing. You should never compare. But yes, when you're talking about comparison, then the comparison has to be done at same level. So a heading is to be compared with a heading. A subheading is to be compared with a subheading. Never that, you should never do the mistake of comparing a tariff item to a heading. That is completely incorrect. So this was the general rules of interpretation. We have basically covered customs so far. Now I come to the GST in order to show the interplay between the two, or maybe a fight between them. Is under GST, the concept or the taxable event is supply. Now there are technically three kinds of supply. First is a very simple single supply. I supplied a laptop, single goods. That's about it. Finished. How it is going to be taxed? On the basis of whatever supply is there. A composite supply, where there are two or more taxable supplies of goods or services which are naturally bundled, and they're supplied in conjunction with each other in ordinary course of business, and one of which is a principal supply. So where I have supplied, say, two items together, which are naturally, bundled and supplied in conjunction with each other, and one of them is a principal supply, that's a composite supply. The illustrations of this we are going to come in the subsequent slide. And last is a mixed supply, where there are two or more supplies of goods or services which are made in conjunction with each other for a single price, and which does not constitute a composite supply. So the starting point to identify whether it's a mixed supply or not is first you have to rule out composite supply. The taxability in this respect is determined in terms of section 8. So in case of composite supply, you'll have to look at the principal supply. And in case of mixed supply, you'll have to look at whatever is the highest rate. This is the concept. Now let's look at the illustrations as to when will something be called as a composite supply, or it's a single supply, is it composite goods, etc. Earlier, when I was a kid, there was this tube light holder. So you had a tube light holder and a tube light. Both of them are, say, supplied together. The question is this a composite supply, or is it a composite goods, or it's a single supply of composite goods? Because needless to say, both of them are going to be used together always, unless we use them as in Star Wars, that shield, otherwise as a sword actually. So otherwise both of them are going to be used together. So what is the nature of this supply? Is it a composite goods? So if it's a composite good, then it becomes a single supply of composite goods. Or is it a composite supply of two or more goods which are sold as a set? Or it's a mixed supply? What are the parameters? How will you identify it? Let's take the example of second. So there is a set, hair set, where you have combs, where you have these straightening machines. This is complete hair pack. You have scissors, etc. What is it? Again, is it a composite goods? Is it a composite supply, or it's a mixed supply? What it is at the end of the day, and how do you identify it? To maybe put you to more thought, let's look at another example. You have a mobile phone, which we've already discussed, whether it's going to be a composite good or composite supply, etc. Let's leave that apart. a mobile phone is always given with a charger. And earlier, it also used to be given with a headset. Now I think the headset is not being given, but it's all definitely given with a charger. Now, what is it? Is it a composite supply of a mobile phone and a charger? Or it's composite goods? That question is to be seen. Then we look at another example. A solar panel is being supplied along with the inverter and the battery. What is it? Is it a solar power generating system? Or it's a composite supply with, say, maybe the principal supply of solar panel? Or it's a mixed supply where all the three items are together, because these are not naturally bundled. And needless to mention, whichever way you come to the conclusion, there is a remarkable difference of rate. If it's a solar power generating system, the rate is 12%. As against if you call it as a mixed supply, then the highest rate will be of battery, which is 28%. So there is a difference of 16%, and it's quite a lot. So therefore, what is important is that you do not directly jump that whenever you see that there are two goods which are being supplied, it automatically becomes a composite supply. No, it might not. It might be a single supply of composite goods only. To further, put some more discussion to it, let's look at, we all now in Jaipur also we have McDonald's, and we all get Happy Meal there. Now in that Happy Meal, you would get a burger, you will get, say, French fries, you will get some cold drink also, and ketchup. Now what is it? Is it one supply of the Happy Meal, or it's a composite supply, but is it naturally bundled, or it's a mixed supply where all these items are given differently? Now what is the important parameter here, or what you should keep in mind while you are ascertaining the classification of such kind of item is, as a recipient, do I have an option of maybe not taking make aloo tikki and instead I'll take veggie delight? Or maybe instead of taking a cold drink, I have the option of taking coffee. Is that even an option? Will McDonald's allow it? So in order to understand what is the nature of a supply, you will also have to look at the intention with which the parties are entering into, like maybe an oral contract or written contract. In case of import, it's mostly like to be a written contract. So the intention of the parties, the intention of the supplier, intention of the recipient, that also plays a very important role in ascertaining what kind of supply it is. Diwali hamper. So during Diwali, I think we all supply it, or we keep supplying it again and again and again. There is a box of mithai, there is a box of namkeen, and there is in this box, there is dry fruits. Now, again, is it a single supply? Is it a composite supply, or it's a mixed supply? Now you look at the, image which is there. I see that the maximum portion is of dry fruit. And I believe that the value also of dry fruit is going to be mostly the highest among all. So will this make it a composite supply, or will it be an individual supply? Again, what is going to be the essential character? So all these parameters are to be seen in order to ascertain as to where your product is going to be classified. Now, say, let's come to the conclusion that whatever I am supplying is a composite supply. Okay, all right, I am with you on that. But once it's a composite supply, now what? How do I find as to what rate of tax I'm going to pay? So the answer to this question is given in the Act only. It says the rate is going to be of a principal supply. Perfect. What is principal supply? Principal supply is what is the predominant element. Perfect. Now, what is the answer to the predominant element? What is predominant element? How will I identify that in my supply, this is the predominant element? So that is not answered in the Act. They have not answered to this question. And therefore, that might take me to, again, to the essential character test in Rule 3B. In Rule 3B under the HSN, you have certain parameters as to, in case if it's a composite goods, how are you going to ascertain the classification? There are certain parameters like nature of the material, bulk, quantity, weight or value, or by the role of the constituent material in relation to the user of the goods, intention of the parties. Let's take a very simple example, which we usually see every day because we go to office every day. We have a multifunctional printer. Now that machine does the function of printing also, it does scanning also, it does Xerox also, and it also acts as a fax machine. Now, how are you going to classify it? So there are the parameters. Now you look, maybe there's a possibility that the printing, out of the total cost, say the total cost is 1,000 rupees, 70% is towards printing. So value would play a very important role in determining the classifications of such multifunctional devices. So value, nature, what is the role with which it is being purchased? All these things will have to be seen in order to determine the essential character, and you can use these principles in order to ascertain the predominant element when you are classifying your item as a composite supply. But at this point, I would like to mention this, that whenever you automatically get, say, composite supplies of 2 or more good together, you cannot call it as or directly jump to it being a composite goods and take the essential character test. You first need to identify whether it's a single supply or it's a composite supply, and then on that basis you identify the classification. Now, at the time when I was discussing the general rules of interpretation, I mentioned about rule 3C. Now, what is rule 3C? Rule 3C says latter the better. So basically, in case if your item is classifiable under 2 or more in the 2 headings, and you're not sure as to, it's possible that it can come under both the things. In such a situation, how are you going to classify? Rule 3C says that whichever heading comes in the end, you're going to classify that item there. But this is possible maybe in customs tariff because it run as a whole. What about whether this can be applied in GST where there are different schedules? And there is different rate in the schedule. So if your item, say, is falling under 2 headings of 2 different schedule, say schedule 12% and 18%, then does this mean that automatically my item is going to be attracted to 18% GST? That might not be correct, because that doesn't seem to be the intention. Or it is going to be in the same schedule. You look at the various entries and see, all right, in schedule 12, this is also a competing entry, this is also a competing entry, because this comes in the end, therefore I can apply it. So whether rule 3C can be applied while interpreting notification, that also seems to be a debatable issue. Though in some of the cases, the tribunal has relied on rules 3C to classify certain goods. So this is the crux or the interplay of classification vis-a-vis the GST portion and the customs portion. We can now, we'll move to the second part of this slides now, which is the valuation and valuation for related party transaction. Now, I said that at the time of import, you will have to pay GST and you will have to pay customs, basic customs duty. But what is the value at which you will have to pay? That has been given under the Act itself and the rules, which says that the value is going to be the transaction value, which is nothing but price paid and payable at the time of import, or price paid and payable at the time of supply in GST. But this is subject to 2 conditions. Firstly, the buyer and the seller should not be related. And second, price is the sole consideration. So the provisions, if you could see that the nomenclature which is used under section 14 and section 15 of the CGST Act to a certain extent is similar. Here also the tax is leviable on transactional value, which is price paid or actually payable. Under GST also it's price paid or payable, and the 2 parameters, buyers and seller are not related, and price is the sole consideration, that remains the same. Similar concept is there for income tax also, that the transaction in case of associated enterprise, it has to be at arm's length. Now we are talking about a situation today, or we are discussing about a situation where we know that the buyers and sellers are related. So in such a case, in customs, you will have to resort to the customs valuation rules. In GST, you will have to resort at the relevant rules of the CGST rules. And in income tax, you will have to look at the various methods which are provided to calculate the arm's length price. Now, again, if you just have a look at the overall, the nomenclature might be slightly different as to in customs GST and in income tax. However, the concept that remains the same, the objective that remains the same, that in case if you are related parties or you are associated enterprise, you will have to establish that that relationship has not affected your price or the value at which you are importing or at the value at which you are undertaking the transaction. Now, I'm just again and again saying that the buyer and seller are not related, or the associated enterprises. But what is a relation, or when are they called related person? The answer to this also is given under the act or the rules, where they have defined as to who are the related person and who are associated enterprise. So if we, for a moment, we look at the customs and GST, all the ones which are in white, officers or directors of one another business, etc., all these are same. So officers or directors of one another business are going to be called related persons. Legally recognized partners in business is going to be, related persons. Employer, employee definitely are going to be related. You spend most of your day or most than half of the day with your employees, definitely you're related. One of them directly or indirectly controls the other. Both of them are directly or indirectly controlled by third person. Together, they directly or indirectly control a third person. Members of the same family. Family also is defined under the act as to what is going to be constituted in family. Now, the two orange ones, these when I'm talking about customs and GST, there is a slight tweaking there. Now, look at under the customs, it says any person who owns 5% or more voting stocks or share directly or indirectly. In the GST regime, it says any person who owns 25% or more voting stocks or share directly or indirectly. So now let's take an example where two related parties are importing certain goods. Now, and one of them owns 5%. When they own 5%, they automatically becomes related in custom. So when this transaction is happening, I am related in customs, but I'm unrelated in GST. So technically, in GST, the transaction value which I have adopted, that should be accepted. But in customs, there is a possibility that SBB might say that, no, your value is not correct because you are related parties to each other. So there is a problem. Look at the next point also. And as a matter of fact, in income tax, it's 26%. So where the control is of associated enterprise, directly or indirectly, they control 26% of the voting power. So again, there is a possibility you might be related in customs. You might be related in GST also, because if you have 25%, but you might not be related in income tax. So this, in the same set of, direct and indirect tax, there is a problem. Now let's look at the second example here. I'm looking at the GST one first, the last bullet. It says, persons who are associated in the business of one another is in that one is a sole agent or sole distributor or sole concessionaire, howsoever described of the other shall be deemed to be related. So in GST, the moment you are a sole agent or a sole distributor, you become related. Nothing else. The moment you are sole agent or sole distributor. As against in customs. See, in customs, the till the purpose of these rules is same. Then it comes if they fall within the criteria of this sub rule. So what it says that in case if you are a sole agent or a sole distributor, you are related, but you will also have to fulfill these criteria. So say, for example, one of them directly or indirectly controls the other. So you are a sole agent, and one of them is, most likely the principal is only going to control. So the principal controls the agent. In that situation, you are related. So there's slightly in the coverage in GST is slightly higher. As a matter of fact, in income tax also, the income tax authorities lately, they started doing this. They started investigating matters where it was a sole agent. And the case of the department was that because you are sole agent, therefore you are associated enterprise and your value is not at arm's length. So courts there finally took a view that no, it might not be correct. Like in customs, you will also have to meet the other criteria like controlling or, being members of the same family, etc. Till there are both the things which are fulfilled, you cannot be called as associated enterprise in income tax. So coming to the thing, now we have established, all right, we are maybe the related parties or we are associated enterprise there. Now, what do I do? So how do I ascertain the value? The rules are given under the customs valuation rules or the IGST rules, etc. They are given there. So first of the rule is transaction value of identical goods. Then you have, if you don't find identical goods, you go to similar goods. Then you follow deductive method, computed method, residual method. Similar things are there in GST also. You look at the open market value. You look at the determination of the value of like, kind, and quality. You look at the cost place, which is 110% of cost of production or manufacture, residual method. Again, with same concept, you have methods, but with different nomenclature, of course. You have COP, controlled, comparable, uncontrolled price method, resale method, cost plus method. All these methods are there. Now, before I move to show the similarity or maybe a dissimilarity between these rules, on the face of it, it looks very easy. All right, you are importing, you are challenging my value. Let's go and take the transaction value of the identical goods and sort it out. This is not so easy. Let's take an example where a party A has imported goods from a party B, and the party A is the sole agent here. All right. Let's take it as maybe a sport. Maybe tennis. Let's take it tennis. Okay. So party A has imported, is a sole agent in the entire country of India of party B, which makes tennis rackets. It's a very good brand. Now they say that no, your relationship seems to have affected your price. So therefore we are not going to accept it. Now, how do I look at the identical goods? They might say that, look, okay, tennis, you are the only importer of tennis racket. We can look at the price which is given for badminton racket, or maybe look at the table tennis racket. Will that be correct? Can these be called as a matter of fact identical goods? Of course, these games are played with a racket, but can you compare a tennis racket with a badminton racket or a table tennis racket? No, that's not possible. Then they might say, all right, okay, department might say, okay, this ye nahi karte, we can do one more thing. They are also importing in, say, Switzerland, which is a country which really likes tennis. So unki value dekh lijiye. Let's compare their value. Now that might not be again correct. India is a cricket playing nation. So the people who are, maybe tennis is still a newer sport as against maybe in Switzerland. So party B might be able to sell their tennis racket at, say, $20 in Switzerland as against $10 in India, because it's still an upcoming market. They want to, start doing it. So can that be compared? Can the value which has been taken in Switzerland can be compared to India? So while you are applying these methods of similar goods or identical goods, you also need to take care of the geographical limit, the brand, the geographical limit, all these things, the perception of the consumer, all these are to be seen while you're applying these methods of transaction value of similar identical goods, etc. Now, moving further, when I said that, there are a lot of similarities between these rules, yes, there is. See, the concept of value of identical goods or similar goods is nothing but open market value determinable by comparable value. In income taxes, comparable controlled price method. Then deductive is nothing but resale price method. Computed value is again cost plus method in income tax. So there are a lot of similarities between them. But what is important to note is there are differences also. So, before I maybe point out the difference of the most important difference of, I think, functions performed, assets employed, and risk assumed, I would want to also explain that there is a slight difference in the concept of transfer pricing and valuation in customs and GST. See, how does it happen? In transfer pricing is generally done at the end of the year. So you start with your benchmarking, and then you would, at the end of the year, you would see whether the transfer pricing study is done and whatever prices you have finally arrived at. This is in lines with this, the benchmarking study. So if in a year, say for a particular transaction, you were supposed to charge 100 and maybe 110 was charged. And in the same year, for a subsequent transaction, maybe 90 has been charged. So you average it out. Income tax authorities are also fine with it. That all right, if you average it for an entire year, more or less the amount, the prices is same as what has been charged by the peers who are working in the same industry. That's allowed in transfer pricing. But in customs or GST, can you do that? Can you argue before the department that, all right, today what I'm importing at 100 rupees. The actual price is 110, but I'm importing at say 100, because in the next shipment, I will charge 120 for that same price. Can you do that? That's not possible, because GST and customs are transaction-based tax. So each transaction will have to, attract the levy of tax. So therefore, you have to look at each transaction. And of course, that's also because of the fact that the rate might differ. So say today you are importing a consignment which has 12% rate or 10% BCD, and tomorrow with the same party, you're going to import another consignment which has maybe 28% or which might have, 20% BCD. So therefore, this concept or this difference of concept has to be seen when you are looking at the transfer pricing study and you're looking at the customs and GST. Now, coming to the point of difference between the functions performed, assets employed, and risk assumed, I think this is a very important point, and it has to be kept in mind when you are, comparing your price vis-a-vis the transfer pricing and customs and GST. So whenever you are comparing, the comparables are to be seen vis-a-vis the brand. What are the functions which are being performed? How much assets a particular company has employed as against the other peer office, or how much risk have they taken as against the other peers? So therefore, these points are very well noticed and considered while you are undertaking a transfer pricing study. However, I find that the SVB authorities generally tend to not consider them as seriously as what is done in transfer pricing. So therefore, this might not be the very strong determinative parameter when you're looking at the customs and the GST. Then apart from that, you have some other differences also. Now, I would before I finish, I would want to talk about certain conflicts, certain conflicts also. Now, let's take an example where a party A is again, say, an agent, or party B is a brand owner, and party A has entered into a contract with them whereby they are importing the goods. They also have a contract to right to use their brand. All right. Now, a party B in this country, in India, they apart from importing the goods, they also do massive, say, advertising and marketing. Okay. Now, of course, if you're going to market or you're going to do advertising, your sales are going to increase. So this is the purpose. Now, as against that, the income tax authorities also think that when you are marketing or when you are advertising, the final benefit is also flowing to the main parent company. So therefore, they can start then proceedings. Now, how are they going to do? They will compare your peers who are working or operating in the same area. They'll see, all right, so in the terms of brand and in advertising, etc., you are spending 5% as against your peers, maybe who are spending only 2%. So this differential of 3% they would challenge. You will have to fight your case before the income tax authorities and explain them that no, firstly, it's not. This is at the end of the day my expense because I am also getting benefited by it. But assume they do not accept it. So you can also take a plea before the income tax authority, and which has been done in a lot of cases, that even if I assume that, all right, this benefit is being also going to the foreign party, the foreign party is going to take into consideration this, and for their subsequent shipment, maybe they will charge a slightly lesser price. So say, for example, if something was coming at $100 to me, they know that I am going to spend so much on the advertising for which they are also going to be benefited. They will charge, say, instead of $100, they'll charge $98. So then, of course, it's fine. So income tax authorities, no problem, perfect, all right, done. Now the customs gets up and they say that for a transaction which could actually be taxed at 100 rupees, you should have paid customs duty at 100 rupees, you have only paid 98. This means you are undervaluing. So there is an, conflict between the customs department and between the income tax department. And so in such a situation, lot of times the assessees have taken an argument that you look, my price has already been accepted by SVB, then why are you now challenging it, to the income tax authorities, they say. But that has been held by courts in various cases to say that no, there are separate rules for income tax, there are separate rules for customs valuation, that is SVB. So therefore you have to look at those rules itself which are given in that statute. Now, before I maybe end this discussion, so before I maybe end this discussion, I want to point out two main things to you. See, firstly, now CBDT and CBEC, there is an exchange of information, which is a formal exchange of information. So the moment whatever you give, whatever stand you take before the customs authorities, the direct tax wing is going to get, aware of it. So therefore, there is a formal flow. On a lighter note, I would also want to mention that all these officers, the DRI, the DGGI, the investigation wing of the income tax department, they all are batchmates. So and they've studied together. So there is an informal flow of information also. So hence what you need to take care is that the stand which you take before the income tax authorities is, in compliance or is in adherence to the stand which you take before the customs authorities, because the information is going to get percolated from one to the other thing. This there in like lot of times it happens. DGGI has started an investigation and for say a domestic supply rate difference. They say that your item should not be at 18%. Sorry, your item should not be at 12%. It should be at 18%. So investigation is going on. And then the DRI comes to know, oh yes, they have imported it also. So the same problem is going to be there. And the next day you get DRI knocking at your door that you have imported the items when 12% was not payable, 18% was payable. So therefore there is an exchange of information between all these wings. You will have to make sure that whatever stand you take before the DRI, same stand is taken before the DGGI, same stand is taken before the CBDT or the investigation wing. With this, I would want to end my discussion. Maybe we can have a question answer session or whichever way it goes.
Yes. So anybody has any questions regarding the topic?
Ma'am. Yeah, please go on.
Ma'am, good morning, ma'am. Am I audible?
Yes, you are.
Good morning, Mrs. Vishwas. Firstly, thank you for your insightful thoughts. Actually, I have a couple of questions. Firstly, when you gave the bicycle example, so ma'am, you have said that we have to look into the essential character. So don't you think like the seat is also constituting an essential character and very vital character to the bicycle? So like if a bicycle without a seat, how can it be considered?
Right. So you're talking about the disassembled one, or you're talking about an incomplete article? Incomplete article, bicycle without the seat?
Yes, ma'am. Incomplete and as unassembled articles.
So see, as a matter of fact, all the items would play a very important role. Like a tire will also play a very important role. But what you need to see is if that incomplete article has attained the essential character of the finished article. So the moment you put maybe the seat, the cycle is good to go. So that point or that point you need to see while you're ascertaining the classification. Because if we go by that logic, तो कभी कोई essential character हो ही नहीं पाएगा. Even a small things like a nut bolt, उसके बिना भी bicycle नहीं रहेगी. So what you need to see is that without, like, the moment you put it, the essential character has achieved and the cycle is good to go, as in it's a complete cycle.
Okay, ma'am. And ma'am, like I have three more questions. Firstly, ma'am, what do like in the HSN rules notification? Ma'am, what do you think, what is the need of rule 2B and rule 3B? Because rule 2B also talking about combination or mixture of goods, and rule 3B is also rule 3B is talking about composite goods. So don't you think a composite good is a combination mixture of certain goods?
I would slightly disagree here. Maybe to a certain extent it could be correct. See, a mixture is bhel puri. You get all the things possible. But is it a composite goods? सब कुछ डाल दिया है, mixture बन गया है. You as a matter of fact, I'm sure in Rajasthan we use it. एक नमकीन ही है जिसका नाम mixture नमकीन है. उसमें हर तरह की नमकीन डाल दी गई है. But will that become a composite goods? It might not. So when you have a mixture, you will have to look at the, again, जो भी principle उसका या essential character उसको दे रहा है, as against composite goods or multifunctional devices जो as a whole बने हुए हैं पूरे. Like the example I gave of telephone, a multifunctional device, a composite good, वो सब attached है एक दूसरे से. So there is a slight difference between mixture and composite goods, though the concept of ascertaining the classification may to a certain extent overlap, but mixture or composite goods में फर्क है.
Okay, and ma'am, the Customs Act, do you think that the current Custom Act, like the Custom Act, since it is made in 1975, it is able to cater the needs of the present time? And lastly, when you talked about both the parties, cannot be the same either in income tax or GST. So, ma'am, what is the consequences if both the parties can be the same?
So, coming to your first question, बहुत सारी acts है जो अभी बनी है. But do you think they are capable, or do you think that they are able to address all the situations? They might not be, and that's why the requirements of amendments. हर बार with each problem और कुछ amendments आ जाता है, कुछ clarifications आ जाता है, CBIC clarifications निकाल देता है, notification निकाल देता है. So I think Customs Act also, it gets amended, keep getting amended, looking at the situation. And as a matter of fact, there is a judgment, okay, जिसमें hearing aids का specific example दिया और बोला गया है that आप जब भी किसी टैरिफ को या किसी भी एंट्री को पढ़ रहे हैं, then you keep in mind the technological advancement also. Now look at an example, okay? जब ये टैरिफ बना था, उस समय nobody knew what is Kindle, the e-reader, books पढ़ते थे जो हम. Today there is an entry of e-reader. So they are changing it. They are changing it. पहले mobile phones different थे. आज के smartphones as a concept ही अभी आया है. पहले नहीं था. So there is a specific description as to what will qualify as a smartphone in the tariff itself. So the tariff is evolving. They are, amending. They are changing, and this is how it is going. So therefore, I think the Customs Act and the Customs Tariff are well, updated.
Okay, and ma'am, lastly, what is the consequences if both the parties are related? Like when you discuss slide before the associated and related party. So ma'am, what happened? In that slide, it is mentioned that both the parties cannot be related either in income tax or GST. So what is the consequences if both the parties are related?
If they are related, then automatically their price would be challenged. उनकी transaction value और या जो उनका arm's length वो price है, वो challenge होगा. Then it's to the department that they might not accept the transaction value, or they might not accept the whether the price is at arm's length or not. So automatically the department is going to initiate proceedings in that case. So that's why as a matter of fact, see how it happens in customs is आपने अगर कोई import किया है from a related party, it's presumed, आप सोचते हैं कि transaction value correct है, you will have to make a declaration to the SVB that I am importing from a related party. Then it's job of it's your job to show कि जो आपने price ली है, जो value आपने ली है, that is not affected by, that has not been affected by the relationship. It's your job to show that. And of course, if they doubt it, then department is going to initiate proceedings, and then you'll have to show on the basis of different rules, etc., that कैसे आपकी price correct है.
Okay,
But
ma'am. Thank you so much. Thank you so much.
Bhanu? Yeah. Thank you, ma'am. Thanks for your session, and it was very informative. A few questions I have. I'm not that much aware about the indirect taxes and customs part, but I'm aware about transfer pricing. Uh, so in transfer pricing, what we do is we do as you said, that there needs to be now we need to be in sync with the indirect taxes as well. So as a transfer pricing professional, we need to be in sync with the customs and all the indirect things also, right? But whereas in transfer pricing, our perspective is very broad. When we make the study, we also assume the risk undertaken, the assets employed, the functions done. Whereas I'm not aware about it, but I don't think that customs takes accounts of all these things. And briefly, you touched upon things like more complex issues like AMP issue. You touched upon that. So I don't think that these issues are taken care by the customs. So the linkages between the two won't serve any purpose.
So I completely agree, and that's what I highlighted also, that the risk employed, etc., that has to a certain extent is not being seen in so depth by the customs authorities.
Yes.
Therefore, what happens is the ball or the burden is completely on you. You will have to explain as to why. So say what will happen in customs, what will happen? They would say that you are maybe doing it at 100. Your peer, which is dealing with the identical goods, is doing at say 120. So then the burden is on you to show as to how this 120 is not correct. And for that, you can definitely place reliance on that, transfer FCAR also, to show that, how these are not identical only at the first place. Identical would not only mean same goods, no. Identical would also means the same quantity of maybe the quantity of the imports.
Okay. So basically, yeah, I think one of the major things is that suppose in transfer pricing also we do the risk assessment, we do in everything, and risk assessment company to company differs. Ultimately, there is no adjustment done on the basis of risk adjustment. Income tax just ignores it because that cannot be quantified. Right? I don't think there is by any scope we can apply that to the customs thing. We are not able to apply that currently in international tax transfer pricing. I think customs though will be a far off game as of now.
Of course, it will be, because how would you know? You would not have details of that company completely, no?
Yes,
so
yes.
Therefore, that's the point of dissimilarity here.
Yeah.
But again, why I wanted to why I touched upon this is that identical goods, when you are looking at the identicals or when the department is looking at the identical goods, it has to be seen from a broader perspective. You cannot only see that the goods which are being imported are same. You also need to look it from the point of view of importer. The commercial quantity which maybe a bigger brand or bigger company is importing has given them that privilege of getting a better deal as against maybe a smaller importer who is going to import lesser quantity. So all these parameters need to be seen while you are ascertaining or when you're challenging the valuation which is adopted.
Yes, that's very natural. Yes, thank you.
Any other questions? I don't think there is any other question with the team. So thank you, ma'am. Thank you so much for this wonderful session. We came to know about all the aspects regarding this interplay, and you discussed the tariff rate interpretation also. Though we, being a practicing people, also don't know the tariff interpretation. What and customs, what are the tariff interpretation? How you need to do that. So you let us understand that also. So I thank you all other participants also for coming at this busy season while filing 99C also, and giving you one and a half hour to this meeting. It's been a wonderful session, and you all, I think all the questions regarding the topic has been covered. So we can conclude the meeting, and the meeting is also live on YouTube, and it is available on YouTube. If you want to see again this video, then you can go on the YouTube and see on the JCJ under the JCJ heading. Thank you so much. Thank you, Sachin, for
Thank you, Disha ma'am. Thank you so much.
Thank you.
Thank you so much. Thank you. Happy holidays to you.
Thank you. Same to you.